Hello, everybody, and thank you so much for joining me today. Today, we're going to talk about how to access private investment deals most people never see and why that is and everything about it. So, thank you so much for joining me. We're going to jump right into it because I know you want to get on with your evening. So, let's talk about why it is how most investors never see the best deals and why that is. It's not because they're not smart and they don't know where to look. It's not because they don't have the money. It's simply because they don't have the access. So, how do you get that access and what's it going to take to be eligible to invest in some of these processes? So, that's what we're going to dig into today. All right, so here's what you're going to learn. You're going to learn how private deals work. So a lot of these investment opportunities, you're not seeing them because they're private, okay? They may or may not be advertised. They may or may not be allowed to be advertised, but they're held privately. So you usually need some sort of connection to get in with them, okay? We're going to learn what accredited investor really means. A lot of people think this is a lot fancier than what it is, but having accreditation can get you into some deals that you may not otherwise be eligible for. So it's important to know what that is. We're also going to learn what it takes to become a sophisticated investor. That's another way to get into some deals that you may not otherwise have access to. But again, there's a lot of misconceptions as to what that takes. And then if you are that sophisticated investor, what is the next step to get in? There are some additional requirements for sophisticated investors to get into some of these deals. And how do you position yourself to become one or the other and to be ready for a deal when it's offered? Because most of these private investments, when they become available, they're available for a very short period of time and you kind of have to jump on it. But you don't want to jump into a bad deal that you don't understand. So you need to do the education up front and know what you're looking for, know what your goals are for investing, what's going to be a good fit for you before you see the deal. So you don't have to go into panic mode at that point. So we're going to talk about getting you ready for that and then how to get access to more opportunities. So that's kind of what we're going to be covering tonight. And if you have questions, we're going to have a Q&A at the end. So please hold on to them, jot them down as you go. We might end up covering them, but you do have a little chat function there where you'll be able to ask those questions and they'll come up on the screen and we'll get those answered for you. All right. So let's see. Who's this for? This is if you earn good income, but want better investment opportunities. This could be appropriate for you. If you're tired of guessing and not knowing what you might qualify for, what you don't qualify for, what's good for you, what might not be good for, we'll help you get the answers to that. And if you want passive income, so this is all about passive income strategies. We don't want to add to your workflow. This isn't about, have a side gig where you do a lot of extra work, okay? So it's not for the get rich quick seekers, okay? This is primarily real estate based, and real estate is more of a long-term kind of gain. So it's not a invest today, get rich tomorrow, because your penny stock's going to go to $1 million a share or the latest crypto or any of that kind of stuff. And it's not for those that want to be involved in the day-to-day of the real estate business. So if you're wanting to get into landlording or something like that, nothing wrong with that, but that's not what this is about. This is not about how to do that. So this isn't hype. It's just that long-term real estate kind of game and how to get into it to build that long-lasting wealth. So that's what we're looking for. Have to do the disclaimer, right? This is for educational purposes only. This is not financial advice. It is not tax advice. It's not legal advice. And you should consult your own team for any of those specifics. All right. So a little bit about my journey, okay? Because a lot of people don't understand how I got there. You see me on the one side with a woodpecker. That's because I was a real wildlife biologist, and now I'm in real estate. People are like, well, that's not exactly a clear path. So I don't know if you've ever been so passionate about something that you can never picture yourself doing anything else. I don't know if you've ever felt that way, but that was me. I was an endangered species biologist from the time I graduated college and for the next 26 years. And I absolutely loved it. Okay. So picture this. One day, me and two coworkers managed to annoy a mama alligator. I'm in Florida. We got lots of alligators, enough that she chased us back to our airboat. And the three of us, me and my two coworkers, we all ended up at the top of the little seat that's at the very top of the airboat that's designed for one person. The three of us are up there balancing, right? As this angry mama gator is thrashing around in the boat beneath us. So that was a Monday for me. Like that's how it was. And on Tuesday, I might be in a helicopter standing on this strut while setting fire to the marsh below. Wednesday, I'm 50 feet up a pine tree with a chainsaw carving out homes for endangered woodpeckers. That's the woodpecker that's in the picture there. So that's called the red cockaded woodpeckers. So no day was ever like the previous one, and I absolutely loved it. But there was something I loved even more, and that was my family. So I have husband Don and two amazing kids, Carl and Alex, and Carl has autism. He attended special needs school designed specifically for kids with high functioning autism. And on the day of Carl's high school graduation, I was invited to give a talk at the ceremony there. And much to my husband's embarrassment, I completely broke down crying on stage because that moment, something hit me completely out of the blue. It suddenly occurred to me that this beloved child of mine, despite all the obstacles he had overcome, was unlikely to ever be able to fully support himself. And it just kind of hit me. Like, up till that point, I had been so focused on just getting him through school that thought hadn't occurred to me. So here I am up on stage. You can just picture this, right? Everyone else in the audience is celebrating this huge milestone. But inside my head, something very different is happening. Yeah, I just, I'm like reliving it now. But yeah, so suddenly that moment had arrived where school was over and I didn't know what was next. And that's when my life kind of took a sharp turn because I realized that I would need to support Carl for the rest of his life, which, if all goes according to plan, is beyond my lifetime. And I certainly didn't want that responsibility to fall to his brother, Alex. And that realization completely changed the trajectory of my life because being a biologist, I love that, but it wasn't paying enough that I would be able to put away enough money and build enough wealth to support him for the rest of his life. So I had to ask myself a difficult question, like, how do I build enough wealth to care for him and care for my family now and beyond my lifetime? So I don't know if you guys know this, but around 90% of billionaires on this planet built their wealth through real estate. 90%. That's pretty huge. And I knew that was possible because at this point, I had already been doing that. My husband and I had actually been investing in real estate along our whole regular career journey on the side. So I'd actually been doing that since 1996. I started that when I was still in college. And that real estate had helped us also buy Massage Envy franchise locations. So we had 2 Massage Envy franchises at this location. So we weren't poor, we were doing well. So we owned those 2 clinics. And between that business and our real estate holdings, we had a net worth in the multiple millions. But being a millionaire on paper, especially today, it just doesn't mean as much, especially when your wealth is kind of tied up in the businesses and in the real estate. And it doesn't necessarily give you the cash flow you need and the security for that long term. But so I knew I needed to scale, but I had seen the light. I'd seen that real estate can be the path forward. I just need to figure out how to scale it without taking on all this extra work. So I needed to figure out how to do it passively and how to do it at a greater scale. And so that's when I kind of decided to leave that career and form Blue Vikings Capital. So that is the business that I now have, and that I'm going to give you a sneak peek into what we do and how you guys can do kind of the same thing. So that was kind of my journey. So I started off just doing like single family homes on the side while doing the real estate thing. And then I started buying some small stuff myself and then scaling into large apartment complexes and doing a lot of that on a passive state. So right now I've got over 25 years of investing experience. I have a personal real estate portfolio worth millions of dollars, single family homes, apartment complexes, a hotel, a bunch of other stuff, right? I'm a general partner or a fund manager in over 2,500 units. Those are spread across 7 different states with lots of different operators and, like I said, Puerto Rico as well. I also passively invest. I passively invest in everything, whether I'm a general partner or fund manager. I'm also a passive investor in all of those deals. But then in addition to that, I use my self-directed retirement account. If you're not familiar with investing in those, when you're doing that, you can't do what's called self-dealing. You can't invest with yourself. So I do that even outside of those units, so hundreds of additional units where I'm nothing but a passive investor. I have no say in anything that happens there. I just entrust other people to do well with my money. And that's outside of that. So lots of passive investing, both in things that I've got my hands on, as well as things that I don't have my hands on. I'm also the founder of Valhalla Villas. So that is a nonprofit with the mission to provide affordable housing and social services to autistic adults. So people like my son, who, when I'm not around anymore, I need to make sure he's living in a safe place and has someone looking out after him when I'm not around to do that. So also, obviously, parent, mother, business owner, so a lot on the plate. So that's a little bit about my journey. But let me ask you a question. When people think about investing in real estate, what do you usually picture, right? You picture buying rental properties, fixing toilets, chasing tenants, dealing with repairs. That's what most people tend to think. But I mentioned that 90% of billionaires got that way through real estate investing. Do you really think billionaires with their massive real estate portfolios are out there doing that stuff? Of course they're not. They're investing passively. So that's kind of what we're talking about. And that's exactly what I learned how to do by partnering with others through funds and large apartment complexes and various other things. And now that's what I help others do alongside me. So I don't offer anything that I'm not investing with. It's just like, here's what I'm doing. If you'd like to follow along, you can do the same thing. But there's going to be some qualifications for that. And that's what we're going to talk about, right? And so it's basically a way to get the benefits of real estate and without having to manage the properties yourself. So whether you're looking for the tax benefits, which real estate has tons of, you're looking for the cash flow, the equity growth, some of it's going to be you figuring out what your goals are with your money and what you really want to do, because we have different investment strategies. So we basically have 2 main strategies to help people with their goals. So first is like monthly passive income, right? Some people are looking for that. Maybe they want to retire early, or they just want to supplement their income, or maybe they're in retirement age and Social Security isn't getting the job done, right? So there's lots of different reasons why you might want that kind of passive income. So for that, we have an income fund, right? It makes sense. And it's just based on real estate loans. So you're basically in the lender's seat without doing the actual lending yourself. And those are fixed returns. So it's just a stable return based solely on how much you invest. So it's 7, 8, 9, or 10%. So that's how those things work. And it just gets paid to you every month. And it still offers liquidity. There's no long-term locking up of your funds. You have 6 months initial window. And then after that, you can add or subtract from your capital balance at any time. The whole time you're getting monthly distributions. And it even has a reinvestment option where you can put money back in, right? So minimum investment on something like that is $25,000. So that's one thing that we offer. So that's one kind of strategy. And then the second one we have is more your long-term wealth building strategy. This is where you also get some tax benefits, okay? So this is our focus on this is large apartment complexes. So through our free investor club, we have an investor club that people can join where they get notified when we have these opportunities available. We then show them what we are investing in, and you can choose to invest alongside us. Maybe you say, no, I don't like that one, or I don't like that state or that operator. I'll sit out and wait till the next one, or that one doesn't check the boxes for our goals, and it's whatever it is, right? But you just get to see what we're investing in, and you get an opportunity to invest alongside us if you wish to. So there's never any, signing up for a club doesn't mean you have to go with everything that everyone in the club's doing, right? So, but this is mainly about equity growth. And the goal here is to double your investment in 4 to 6 years. So those are the deals we're looking at, is the ones that kind of fit that role. So we're looking for 12 to 18% annualized returns there. That doesn't mean you're getting 12 to 18% every single year in those deals. A lot of that payout comes at the end of the deals. So the cash flow during the whole period might be much lower. It could be no cash flow if it's a new development, right? There's no rents being paid, right? Or it could be a value add where there's a little bit of money coming in, but not a tremendous amount at first, but then it builds with time. But the most money is usually at the resale. So that's why we have kind of two things, because the income fund is more about that consistent cash flow, steady return, knowing what you're getting. And this one is more the equity play, and it also comes with more tax benefits. So there's a little bit of both there. So yeah, so those are kind of the two main strategies that we offer. But to be eligible for any of those, you have to meet a couple criteria. So that's what we're going to talk. So most investors stay stuck only because they only see like public investment opportunities. Okay. And these are all privately held investment opportunities. So they'll see things like what's on the stock market. They'll see mutual funds and maybe bank CDs and money markets. But, you know, those things are paying like a few percentage points at best right now. And money markets, your bank doesn't even have to tell you when those drop. So I recently checked the money market that was at 5% not that long ago. And now it's at 2.2%. I was like, you know, so those are what most people are familiar with. So they just don't know that there's other stuff out there, or they don't have access to them. And the other thing that gets people stuck is they can't tell a good one from a bad one. So they're afraid to invest because they don't have the education behind it. So that's another thing I do a lot of, is educating people, not just on how to be eligible to invest, but how to figure out what you want to invest in, what would be good for your particular situation. You know, are you looking to save up for a kid's retirement or a kid's college plan, or for your own retirement, or whatever it might be? So you have to figure that out. And then what kind of investments would fit that box, right? So that's part of what I do, is a lot of education like that, and helping you vet the various deals out there, because even though it might be the right structure for you, that particular deal may not be a good one. You know, there are better opportunities and less better opportunities, right? So, so we kind of already talked about this. There's a public world that everyone sees, and then there's the private one with limited access. And most people live in these two worlds, right? That's where you get. So how do you get access? So you have to be connected with someone who's either a capital allocator, which technically I am, and or a deal sponsor. So that's like the people that are actually buying the apartment complexes, putting together financing, and offering it available. So one of those two. So the difference, so being a capital allocator, basically I'm looking at all the sponsors out there, all the opportunities, and I'm cherry picking, right? If you go directly to a deal sponsor, the economics are generally the same. Sometimes I can even get better economics because I'll get a lot of us together to invest on something. But you know, the deal sponsor, they're obviously going to be biased towards their deal. You know, I think that goes without saying. But that being said, you could connect with a bunch of them and learn to evaluate all these deals on your own. And you can do essentially what I do, where you get to vet them out and flesh them out and do that. So those are two ways to get access. So once you connect with those people, then you need to join their alert list. So they'll have lists of like an email list or newsletter or something that comes out that says what's coming up and what's happening. Or they may have an investor club like we do, where there's we share deal information, but also education and that sort of stuff all in there, to make sure that everyone's fully qualified. And then you have to become either an accredited or a sophisticated investor to qualify. So we're going to break that down, what those mean, and how you check the boxes on those. But anybody can be in either of those boxes. So we could get you there. And then you want to educate yourself and be ready when an opportunity fits the goals and criteria that you're looking for. Again, a lot of these deals go really quickly. We had one where on the webinar itself, it actually filled up before we got to the last slide. So it just depends on how much space there is in some of these. Others may be available all the time. Like our income fund is available more times than it's not. There are times where we have more capital than we can dispense, and then, you know, we halt it, but then we might open it back up in 3 or 4 months. So there are definitely opportunities that come and go and are less time crunched. And then there are ones where the window's really short, but that's why you need to know what you want and what you're looking for in advance, so we can help you get there. All right, so let's dive in to what an accredited investor is. This might be a term you've heard, but you didn't understand. And what I've run into a lot, is people are like, well, I'm not accredited. I don't know how to get accredited. I couldn't possibly qualify for this. And then when we look at it, they actually are qualified. So like a lot of people are accredited and they don't know it because it's really just an economic kind of thing. So there's several different ways to qualify. So we're gonna look at it. Okay, so the first one is income based. So really all accreditation is just accreditation just provides proof to the SEC that you can absorb a loss because all investments have risk, right? So if something goes terribly wrong and you lose all your money, is that gonna break you, right? That's what the SEC is concerned about. So that's what accreditation is. It's like if you check these boxes, then they're gonna assume that you can absorb a loss. So if that's the case, then it opens the door for you to get into a lot broader kinds of investments, like there'll be more available to you. It doesn't mean if you're not accredited that you can't get into deals or that those are lesser quality deals. That's not what it means. It's just checking that box, and then the SEC opens the door a little bit wider for things you can get into. So number one way to qualify is income based. So if you earn $200,000 or more per year, or $300,000 a year if you're filing jointly with a spouse, then you qualify as accredited. It's that simple, okay? And you have to have the reasonable expectations that that income is going to keep going. It's not like a temporary thing, right? So that's one way to qualify. These are different ways. You don't have to meet all of these, okay? So it's one or the other. So the other one is through net worth, right? So if you have a net worth that exceeds $1 million, either individually or jointly with a spouse, and it excludes your primary residence, but it can include investment properties, retirement accounts, business ownership. A lot of people forget the business ownership part, right? A lot of other things. But yeah, your personal home is not going to count towards that. And a lot of people don't realize how fast this adds up. So here's a slide that kind of shows some other things that people forget about. Brokerage accounts. So if you have stocks, mutual funds, any of that kind of stuff, bonds, treasuries, all of those count. Retirement accounts, even those held by your employer, that all counts. Real estate that is not your primary residence. So if you have rental properties, right? Even if it's partial ownership, maybe you've done some other syndication kind of investments, that ownership counts towards your net worth. Cash, of course, counts. Vehicles, cars, boats, RVs, any kind of vehicle. As long as you can put a value on it that can't really be argued, right? Like you have to be able to put it. Collections, tangible items. You know, there are people who have very valuable things in their homes that are collectible and tangible items. As long as it can be evaluated and someone could say, yep, that is what it's worth if it came into question. Most of the time you don't have to question this kind of stuff. But you'd be surprised how fast all of that can add up. Sometimes, like, I look at just all the junk in my garage. I'm like, ooh, there's some value sitting here, right? So I actually have a spreadsheet that you can download for free. There's no opt-in or anything like that. If you want to figure out if you meet the net worth criteria for accredited investors. So this is just a self-doing spreadsheet. You just plug in some numbers. I do not see this. You're going to download this for your own use. You would make a copy of it. So it ends up in your Google Drive. And then you can use this for yourself to determine if you meet that net worth criteria, because it might surprise you. So I can try to let me try to put the link in the comments here for that in case you can't scan the QR code there. Okay, I just put that link in there. So hopefully you can see it. It does depend if you are joining us on StreamYard or if you are on Facebook or LinkedIn or YouTube. Sometimes you won't see the comments there. But if you're here on StreamYard, then you should be able to see that. If not, you've got the QR code. So feel free to check that out. Like I said, there's no opt-in or anything like that. You don't have to give up your email or anything. So another way to qualify, this is kind of new, so a lot of people don't know about this, but is professional certification qualifications. So if you hold any of these financial licenses, for example, then that can qualify because you have to go through a lot of financial training to get these kinds of qualifications. So they figure if you know and understand all of that, then you should obviously be accredited and be able to do that. So it's a matter of that sophistication that the SEC wants to see. They want to know that you have some knowledge there. And then one of the last ones, I guess there's one additional one, is through entity-based qualification. So if you have an entity with a value of $5 million or more, then that can work. Or if you have an LLC or something where everybody in the LLC is accredited, then the LLC itself becomes accredited. So those are two ways. We see this a lot with like family offices or people associated with family offices. Even if you work for a family office, you can actually qualify even if you yourself are not accredited, as long as you're investing in whatever the family office is also investing. That probably doesn't affect a lot of people out there, but just note that there are some other little nuances out there. Now, it is important how it is verified. So there are a couple of different types of these private offerings. They're all regulated by the SEC, and it's Regulation D if you care to look it up. And they have a couple of different exemptions in there. And by exemptions, I mean they don't have to file paperwork that takes years and years and years to process. We won't get into Reg A and all that kind of stuff. We're not going to get into all that. But the exemptions, just those are what real estate syndications specifically tend to use, because that lets them process this paperwork fast, because real estate doesn't wait. Once you have something under contract, you have to close pretty quickly, right? So you can't wait years for stuff. So there are two exemptions under there that they use. It's the 506C and 506B. So B as in boy and C as in Charlie. And depending on which kind of entity you're going through to invest in these private investments, are going to be labeled for one or the other. So if it's a 506B, you can actually just check a box that says you are accredited, because 506B offerings allow both accredited and sophisticated investors. Okay, so it's not excluding anybody. They will limit it to only 35 sophisticated investors, but there's an unlimited number of accredited investors in that. But you don't have to actually show that you are accredited. You don't have to provide proof of your accreditation. You can literally just check a box, because a 506B, you actually have to have some sort of relationship with the person that's presenting this opportunity to you. So if I had a 506B offering right now and you and I don't know each other, I can't present that to you. Okay, that would be a breach. I cannot go advertising it on Facebook or putting it on a billboard or any of that kind of stuff. I have to hold that close to my chest, only to the people that I have a pre-existing relationship with, someone that I already understand what their investment goals are. I understand if they're knowledgeable enough to be investing in this real estate kind of stuff. So that's what a 506B is. It's kind of set up for friends and family and people that you have some sort of pre-existing relationship with. So in that case, the SEC assumes, okay, it's less chance of fraud. They already have some sort of relationship. We'll let them just check a box to say whether or not they're accredited. And then, like I said, limited to 35 non-accredited or sophisticated investors in those. But for the 50C6, C as in Charlie, there it is only available to accredited investors. So that's where the window opens up if you have that accreditation, because now you're eligible for both 506Bs and 506Cs. So that's why we're talking about this. So, but for the 506Cs, because it's only allowed for accredited investors, you have to be verified. You have to be verified that you're an accredited investor. So there are different ways that this can happen, right? So technically, you could turn all your tax returns over to the person offering this, and they could look through that and do an income verification. Okay. Most people in the real estate world do not want to do that. They don't want to look at your personal taxes, and you really should be careful who you share that kind of information with, right? But technically, it could happen that way. But most of the time, people in the real estate world, they want to stick to the real estate stuff. They don't want to get into taxes. So they're going to say, no, we want third-party verification of this, right? They could also review bank and brokerage statements to check for your net worth. If you had a lot of real estate holdings with a lot of value, that you could show them that kind of stuff. And they could maybe decide that they're going to sign off on that. But in most cases, they're going to want a third-party verification letter. Now, these are not hard to get. CPAs do these all the time. They usually have a boilerplate form. If you have a CPA that you're doing your taxes with regularly, they already know your finances. They're going to be like, yeah, okay, yep, I know you qualify for this based on income or based on your net worth or both or whatever. And they'll just be able to give you a letter that says you're good. And then that letter is good for 90 days. Within 90 days, you can provide it to somebody that's got these offerings. And then once they have that on file, they can keep on file for 5 years. So you don't have to get a new letter every single time. Okay, so keep that in mind. So your CPA is usually the easiest person to get this from. But an attorney can also do it. A registered advisor can do it. Or there are agencies that do this. They can do it. Some of them are free. Some are very low cost, like maybe 30, 35 bucks or something like that. Not very expensive at all. So one of the ones we use a lot is Parallel Markets, but there are like 3 or 4 companies that can do this, and all of them are fairly inexpensive. And basically they will then be that third party that can review those other documents, be it your tax returns or your bank statements or whatever. That way you're not sharing it with somebody that maybe shouldn't be looking at that kind of stuff. So it's that third party kind of stuff. So that's usually how that happens if you need to be verified. So again, that's for 506Cs only that you need that verification. There are some misconceptions, right? I need to be ultra wealthy. Well, I just showed you that on that spreadsheet, you don't really have to be ultra wealthy. So it used to be the case that to get into private investments, you had to be super, super wealthy. Now it really is 200,000 in income, 300 with spouse, or $1 million investment net worth, or in some cases, not having to be any of that, because we're going to talk about being a sophisticated investor where you don't have to do that. So you don't have to be ultra wealthy. My home counts towards the $1 million. No, it does not. You cannot do it. A lot of people don't understand why that is. They might have a lot of value in their house. They say, well, if I took the money out, put the cash in my bank account, now it does. Well, no, because the liability of that house would count against your net worth. So that doesn't work either. But that's basically because the SEC wants to be cautious with who they allow to have this designation, because they don't want you to be homeless, right? If you end up pulling all the money out of your house and putting it into a bunch of investments or just one really bad one, and something happens, they don't want you to be homeless. So that's why that is in place. And I can just check the box. So nope, you cannot for 506Cs, you can for 506Bs. So getting that verification, it doesn't take a lot of time. It's done every day. It's very simple. It's worth the time to do if you're serious about this type of investing. All right, we're going to talk a little bit about sophisticated investors. Okay, so a sophisticated investor is someone who has enough financial knowledge and experience to understand the risks and merits of private investments, even if they are not accredited. So if you do your homework, you can still get into private deals without meeting those income verifications. So how does it qualify? How does it qualify you for? What does it qualify you for? Sorry, small text and the eyes are getting old. Access to certain private investment opportunities under that 506B offering. So under that reg only. It's the ability to invest alongside accredited investors in those select deals. So I mentioned you can have 35 sophisticated investors in those, an unlimited amount of accredited investors. Participation opportunities not available to the general public. You will never see these advertised, okay? They cannot legally be advertised. 506Cs, they can. They can put that on Facebook and they can plaster it on the side of their vehicle, hold up a sign, walk it through the mall, whatever they want to do with those. And so that begs the question then of how do you become sophisticated? So you have to gain knowledge of real estate offerings, investment structures, and the risk factors. Okay, so it's really critical that you understand exactly what you're getting into. So that's why I do a lot of educating on this subject. You need to work with a qualified advisor, coach, capital allocator, or another fellow investor to get that education. And these days, education is everywhere, guys. This is not something you have to pay for. You don't have to. I mean, there are people who do that, right? But you don't have to do that. I mean, YouTube University, all the books out there. My website's got a ton of free information, blogs, downloads, videos, books. I've published several things. All of that is utilized for free. And I'm not the only one out there doing that, guys. There's a ton of information. So it's not hard to do this. And you have to demonstrate the ability to evaluate an investment independently or with guidance. So you don't have to be a math major or a spreadsheet expert. if you have some guidance along the way where someone can show you why this works or why it doesn't work and what the risks are, but you have to be able to interpret and understand what that's happening with. So those are two of the different ways to get into these deals, is through sophisticated investor or that accredited investor. Why it matters, again, access to private deals, that's kind of what we're talking about. Just more opportunities and better positioning of your money. So you're not just stuck with what the bank offers or with the stock market. Stock markets, as we know, they can go sky high or they can really dip down low. Sometimes it's makes sense of why it's doing it, and other times it doesn't. It's very emotional, right? So if you just want a nice even keel kind of stuff, real estate tends to be good for that. If you just like diversification, it's really nice for that too. So yeah, it just gives you more opportunities. And accreditation, there's other things you can invest in too, right? Like, I'm in the real estate world, but there are people who do syndications. For syndications is the term for this type of passive investment into various businesses as well, right? So there's a lot of people investing in like car washes and things like that through this model. So, but the big mistakes I see all the time from new investors that I want to make sure you don't do is chasing returns. Like just looking at, oh, this one's got the highest return. This one's got like 30% return. It must be fantastic, right? Those are all projections usually in those big deals. Okay. Unless it's something like an income fund that's producing a fixed return that gets every month, like that, you kind of know what you're getting into. But don't just look at the numbers, really look at who's behind it. That's more important than anything else. What markets they're in and what the asset is that's backing it, and how likely they are to actually achieve those projections, because they are just projections. And not understand the deal, guys, don't ever invest in something you don't understand. If you don't understand, set up calls with people, get them on the phone, make them understand it. Tell them, hey, explain it to me like I'm a fifth grader, right? It's okay. If they're not willing to listen to those questions and answer those questions, then you don't want to be investing with them, right? So, and then the other thing I see is waiting too long. Like, the longer you wait, everybody that's invested is like, that did well, they always just wish they did it earlier, right? I wish I would have started this 5 years ago or 10 years ago, right? A lot of people get stuck in analysis paralysis. You definitely want to learn what you're doing, but then take action on that. Okay, so don't wait, because money compounds with time. So you want to give it that time. So, but I see people making these investments, so those mistakes. So I always want to point those out. These are just some examples of some of the deals that I've invested in and have allowed others to invest in. So on one side, this was Rice Apollo Heights. This was late last year. This is not a current deal, right? That was a 506B offering. So we had sophisticated and accredited investors in that deal. And so that was a very large apartment complex in Texas, and so that's the type of thing that we like to do, those types of investments. We do those about every quarter or so, about every 3 to 4 months we'll have something to that effect. Not all of them are 506Bs, and but that particular one was. But of course, that's an old deal. I couldn't be telling you about it if it was a current deal, right? And then the income fund, that's the one I mentioned that just has the fixed returns. That's really great for just wanting that cash flow right now, or wanting to earn compound returns, because you can auto reinvest that on a monthly basis. But that one is for accredited investors only. So you've got one where it's open for everybody and one that's not. So those are just kind of samples of what we do and availability. So how can I help you? That's the next step. So we do have an investment club that you're welcome to join. It's the Blue Vikings Investment Club that gets you access to the deals that we're investing in, and also lets you set up a call with me so I can determine your eligibility for investing. Okay, it's not. A lot of people are afraid to get on these calls. They think it's going to be like me quizzing them on stuff. No, it's just, let's see where the gaps are in your education, if I can help you with that and what I can provide you with. It's also a chance for you to get to know me, get to see what kind of things I'm investing in, whether or not that's something you like. If it's not, I have a lot of friends who are in this business too, right? I can point you to somebody else. So it's a chance for you to vet me, vet the operators that I work with, and just get all your questions answered. Okay, so that's your pathway into that. So there's a link there. You can type all that in. I can put it maybe in the comments, and if not, there's a QR code there. Let me see if I can put this in the comments as well here for you. Maybe. Well, I'm just going to put the main website in there, and then you can just hit the invest with us button at the top, and then you can go there from there. So, but we'll do a strategy call if you want. You don't have to do that to join, but in particular, if you're a sophisticated investor, you would need to set up that strategy call to be eligible, right? If you are a credit investor, you could join the club and not have to do that call. But I would like to get to know you. I'd like to see what you might be interested in, so I don't bother you with things that you wouldn't be interested in. There's no charge for these calls. There's no charge to be in the club. It also gives you a lot of education opportunities. I do also have a free like 7-step course that you can go through if you want. It's done at your own pace, and that can help you get that sophisticated investor status, and learn how to vet deals, what to look for. I also do a lot of the deal vetting for you. That's part of what I do is, I look at all the parameters of these deals, whether or not this is a good deal. And so when I offer it, it's been pre-vetted. That doesn't mean you shouldn't look at it with a fine-tooth comb as well, but it is, exactly that. It's kind of a pre-vetted opportunity, and it gives you access to that. So that's kind of all I've got for you today, guys. So at this point, I'm happy to answer questions. If you have questions, please just put them in the comments there, and I will try to address those. And let's see, I'm looking through the comments now, see if there's anything that has come up. And also, you'll have access to this recording. So anybody that registered for this will get the recordings, whether you were here or not. So if you feel like I went too fast on something or you have additional questions, you're welcome to do that. So, all right. I don't know if either I was super clear and you guys have no questions, or you're just typing really slow. Thank you, Ulysses. Thanks for tuning in. Appreciate it. So, all right. I'm not seeing any questions, guys. I'll hang out for a few more minutes just in case you're putting them in here. But if not, it was great seeing you. Thank you so very much for coming. And I look forward to connecting with you soon. Have a good evening. You're welcome, Gory. Thanks for tuning in. Thank you. You're welcome.